Congratulations! You found the Pirls Stock Market Commentary featuring the proprietary bull-bear point and figure market breadth summary chart for Sunday, May 17th, 2015. Market breadth. With this past week's market advance, our bull-bear point and figure ratio rose from 0.98 to 1.01. advancing slightly into very slightly bearish territory. The total count of securities in bullish or bearish patterns fell fractionally to 2,936. The count of bearish stocks decreased 2%, while the count of stocks in bullish patterns increased 1%. The Pirls PNF Market Breadth Summary Chart shows us a market now 2 consecutive weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, and clicking Register. Through following the prompts, you will find a coupon for a free 2-week trial subscription. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 7 points for the 7th decline in 15 weeks. At a negative 40.23 points, it continues below all 9 tops above plus 100 and above all 4 bottoms below minus 100 in the last 3 years. Market Gauge Volume Analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode. In the last 2 weeks, the Nasdaq had 1 accumulation day and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq ended in neither accumulation nor distribution mode. Momentum. At Wednesday, 5/13 close, the CCI 20 Daily presented a Woody's zero-line reject long entry signal within the plus or minus 50 range. We will continue to follow this trade simulation in next week's commentary. In Woody's CCI trading system, 6 consecutive bars above or below 0 are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 43 weeks ago, while the daily CCI 20 began a Woody's uptrend 4 weeks ago. The CCI 20 weekly continues in a Woody's uptrend and at plus 82.71 remains outside the plus or minus 50 range for a valid zero-line reject long entry signal. Industry rotation, the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, computer hardware, semis, and REITs have entered the top 5. Oil has entered the bottom 5. Oil services has left the top 5. REITs has left the bottom 5. Bearish, gold and silver continues in and now leads the top 5. Disk drives continues in the bottom 5. Focus this week from www.globaldeflationnews.com. Dow Jones Industrial Average Elliott Wave Update for week ending 5/15/2015. The following are some key points from the article. The Dow Jones Industrial Average is on the cusp of a major reversal of fortune. The ending diagonal triangle that we have been watching form for many months is all but complete. When the reversal occurs, the collapse in stock prices will be swift and relentless and will surprise almost everyone. A close below 17,841.90, the wave low of minor wave 5 would imply that the major trend reversal is underway. Most people have become almost immune to the tales of woe in Europe. Almost everyone in the US believes the economy over here is doing much better than Europe and will not suffer the same fate. This chart from EWI's May issue of the Elliott Wave Theorist shows a key measure of the US credit situation. EWI's Steve Hochberg writes, quote, "The quantity and quality of bond issuance over the last 3 years signals the potential for a credit washout that is even more severe than that of 2008-2009. It's hard to understand why mainstream economists cannot see this disaster looming right in front of them. The data is so much worse today than it was just before the financial crisis in 2007-2008. Yet the Federal Reserve and the U.S. Treasury, the Congress, the President, and all of their financial advisors are acting as if nothing is wrong. When the markets start the next leg down, bond yields will rise, bond prices will fall precipitously, and debt defaults will rise rapidly and relentlessly. The defaults will occur in every debt class simultaneously." Thank you for tuning in for this week's Pirls Stock Market Commentary, featuring the proprietary bull-bear point and figure market breadth summary chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a great week coming up, and wishing you true success.